How's it going, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. So today we're going to be going over Wish stock contact logic. So Wish has been pretty talked about in the stock market as of recently. As we check the Wall Street Bets chatter, Wish is number 2 on the list for the most talked about stocks for the daily and the weekly chatter, being mentioned almost 3,000 times. So Wish is a lot on people's watch lists. A lot of people are watching this stock, seeing what it's going to do. And personally, I think it's a great buy. As we can check the 1 year, it did IPO mid-December at a price of around $24, hit highs of $32, $31, $32. And now it's at all-time lows. So I think it's a great pickup regardless if you're in it for the hype or long term. I think it's a great stock to buy. And I think that overall it is due for a recovery. As we can see, it's down 52% since it IPO'd. And it's down maybe 66% since from its all-time highs. So at this price point of $11.38, it's a great buy for your long-term portfolios, or if you're just trying to ride the hype in the short term. So Contact Logic, Wish stock, great stock that you should consider putting in your portfolios, whether you're buying shares, selling puts, or buying calls. I'm pretty bullish on this stock, but I don't know how much it's going to rise in the short term, despite all the hype it's getting. But there's a lot of great catalysts coming out for this stock, such as a partnership deal with PrestaShop. And PrestaShop is just like Shopify. It's an e-commerce platform where people can build their own websites and sell their products on it. So this is pretty huge. A lot of people are watching this, and it did end up popping up the stock earlier in the week. As we can see, this huge run up, and it sold off a little bit in the morning. So it's at a pretty good price point at $11.38. And this will enable merchants and brands on the PrestaShop platform to sell their products on the Wish marketplace. So Wish is going to get a lot more traffic due to this partnership, which is pretty huge for Wish. They're going to get a lot more revenue, and overall, it's going to be really beneficial for Wish as a platform. So Wish, right now I'm selling a $10 cash secured put. I know I always mention cash secure puts, but it's honestly my favorite strategy. It provides reliable monthly income consistently for me. I do like to gamble every now and then, but I always go to my reliable selling cash secured puts, and I will be making that video on cash secured puts later on in this week. So right now I'm selling one cash secured put, $10 strike, and collecting. I collected $100 of premium, and it's bled out to $18. So most of the premium is bled out, and I can probably just close it out right now, or pretty soon, because there's not much premium left in it. But let's check out the options chain. Obviously, you could buy shares. That would be the best, safest strategy you could do. For long-term portfolios, that's going to be what you want to do. There's a ton of growth potential in the stock being at such a low price point. And especially with all the chatter going around in Wall Street Bets, people talking about the stock, people YOLOing their money, this stock has the potential to blow up pretty soon if people keep pumping up this stock and hyping it up on these Reddit forums. But checking out the options chain, I wouldn't recommend June 18th expiration date. There's only 3 days left in the market for this week, and I don't think that's enough time to really do anything. The calls are most likely going to lose, and the cash secured puts is a bit. You're not really going to receive too much premium. If you want, you could sell the $11 strike and collect $63 of premium. That's not that bad. But it's pretty close to the current stock price. So if it does drop, you are going to get assigned. But of course, the good news is if the stock price goes below $11, you don't really lose all your money. You're just going to own 100 shares at $11 each, which is pretty good considering that you're going to get your shares a little bit cheaper than the current price. But July 16th, would be my recommendation if you're selling puts. A $10, okay guys, look at this. A $10 cash secured put, you're going to yield $143 of premium. That's really, really good. That's going to be a 14% return on your money as long as Wish stays above $10 by next month, July 16th. And you sell 10 of these, then you are going to collect $1,400 of premium, putting down $10,000 of collateral. Obviously, if you don't have the $10,000 collateral, just sell one or two, how many you can afford. And overall, it's a pretty good return on your money. If you want to be a bit safer, a $9 strike could be pretty good. $88 of premium per $900 of collateral putting down is a pretty good return as well. And if you were planning on buying shares anyway, you could sell at July 16th cash secured put at $11 each and collect $210 of premium. So that's an alternative if you were planning on buying 100 shares immediately. You could just sell a put instead. Because I like the strategy because you get to make money even if the stock stays flat. So the premium is always bleeding out, and this time decay is always on your side, which is makes it my favorite strategy of all time. But if you want to do long term, obviously just straight out buy shares, and if you want to, you could buy a leap, something like a January 21, 2022 call. And a leap is just a long-term equity option with just a long expiration date. You're not really buying weekly options. So it's a little bit safer. You have a lot more time for the contracts to play out. And yeah, that's my recommendation if you want to play options on this stock. Something further out, January 2022 sounds pretty good. And you can buy something like a $15 strike call. It only costs you $375 of premium, which is pretty nice. So I would recommend anything between this $11 strike and the $15 strike if you want to buy a call option with a far expiration date. And with these far expiration dates, don't panic if the stock drops in the short term. Because we do have a lot of time on our hands for the contract and the stock to play out. So if you want, you could buy contract now, and if it does dip, you can buy the dip. You can average it down and buy even more contracts if the stock price happens to have a short-term dip. Because right now it's at a pretty low price point. I don't think it can dip too much. But if it does, you always want to have some cash on the sidelines in order to buy out those dips, because we can't really perfectly time the bottoms or the tops. So averaging out is usually the best strategy to do. So that's my take on Wish stock. Pretty good stock for the long term. I highly recommend looking into this stock. There's a lot of chatter on Wall Street bets, so it could see a huge run up in the short term. But even as a long term stock, I think it's a great buy. As we can see on this chart right here, it's still down a pretty big amount from its all-time highs of around $32, $31. And as well as being 50% down from when it IPO'd. But that's my take on Wish. Leave a like if you like the video, comment down below what your thoughts are on Wish, and of course, please consider subscribing if you're new here to the channel. It helps out a lot. Thanks for watching.